A very good afternoon to all my dear students. So I hope you all are fine, and I can see many of you have already joined. So Swati, good afternoon. Bhumika, good afternoon. Om Krishna Gupta, good afternoon. Students, I hope that the homework that I always give you, that you have to go through the module till where we have studied, and most particularly for this chapter, chapter number 5, which is audit of items of financial statement. I asked you in the last session to prepare summaries. The way I'm sharing the screen with you, I want you all to make summaries on the left-hand side of your module. There is ample space, and in your own language, right? Picking up the keywords, or if not making the summary, then at least highlighting the keywords. So I hope you all have done that. Quickly send in your replies, and then we will start with the topic, which is what? Disclosure with respect to trade receivables. So Om Krishna Gupta and Swati, they are saying, yes, ma'am, we have done. Others also, please reply whether you have started making summaries or not. So let me just share the screen. So we'll be starting with the disclosure requirements. In the last session, just a minute. In the last session, we have done the various audit verification with respect to various assertions relating to trade receivables, right? Now we'll be starting with the disclosure requirements. So quickly send in your replies whether whatever we have done so far, it is clear, because in the last session I was not able to view queries of some of the students. So I hope whatever we did in the last session was clear to all of you. Quickly send in your replies. Right. So with respect to disclosure, first of all, though, the auditor will see as to whether, see if there are any trade receivable which are in foreign currency, in forex. So the same should be restated as per AS 11. What is AS 11? It is, what is the name of AS 11? It is the effect of changes in foreign exchange rates, right? So check the restatement of foreign currency trade receivables that has been done in accordance with AS 11. Then with respect to related party, AS 18 will come into your mind. So whether proper disclosure as required by AS 18 for the related party transaction, whether that has been done. Then with respect to the transaction with parties covered under section 189, that is the register of contracts or director or arrangements in which directors are interested. So whether the same has been reported as required by CARO 2020, right? Now, our language remains the same, that ensure whether the following disclosures as required by Schedule 3, Part 1 to the Companies Act, whether the same has been made with respect to trade receivables. So what are the disclosure requirements? So you may get a direct 3-mark or 4-mark question that what are the reporting requirements with respect to trade receivable aging schedule, right? So this table you will have to make. So the company is required to make the following disclosure. So what is the responsibility of auditor? We will examine whether such disclosure as required by the Schedule 3, Part 1 to the Companies Act, whether the same has been made by the company or not, right? Now, what are the particulars? So the amount that is outstanding for following periods from the due date of payment. So which is outstanding for less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, or more than 3 years. And here there is a bifurcation which is given into 4 parts, which is what? Undisputed trade receivable, which are considered good. Next is undisputed trade receivable considered doubtful. So under the head undisputed, there are 2 categories, which is good and doubtful. Then disputed trade receivable, if any dispute is going on with respect to any particular trade receivable, then whether it is considered good, right? And if it is doubtful, right? Then similar information shall be given where no due date of payment is specified. In that case, disclosure shall be from the date of transaction. Very logical. Unbilled dues shall also be disclosed separately, right? Now, these trade receivables shall be subclassified as. So you may get a 3-mark question here also, that the trade receivable subclassification. So it is what? Secured, considered good, unsecured, considered good, doubtful. And then allowance for bad and doubtful debt shall be disclosed under the relevant head separately. So it shall be given that the provision with respect to bad and doubtful debts, with respect to these 2 points shall be disclosed separately, which is what? Debts due by director or other officers of the company or any one of them, either severally or jointly with any other person, or firms or private company respectively, in which any of the director or partner, the director is a partner or a director or member in the company, that shall be disclosed separately. So many times students ask me that, ma'am, is there a need to learn these disclosure requirements? Yes, you will have to learn. And I understand that this schedule 3 part 1 is in your accounting also. So there also you must have obtained an understanding and you must have learned these disclosure requirements. So this was with respect to your trade receivables. Now let us start with the examination of various assertions relating to cash and cash equivalents. Before that, please let me know if you have any query. So Amrit Chaudhary is saying clear, Om Krishna is saying clear, Bhumika is saying yes, ma'am, clear. Okay. Others also please reply. Cash and cash equivalents. Just a minute. So just give me a minute. Cash. Yes, with respect to cash and cash equivalents. So the term is cash and cash equivalents. So cash in hand, balances with bank in the current accounts, margin money account, cash credit account, FDs, checks in hand. So with respect to all these items, what audit procedures the auditor will perform, this we are going to check. See students, all these cash and cash equivalent items, these are what? Liquid assets. These can be readily convertible to cash, right? And therefore, since these can be readily convertible to cash, chances of misappropriation is high. So the employees may misappropriate, or you can say these items are prone to misappropriation. So that is why the auditor must apply what? Professional skepticism. That is, he should be alert all the time and he should be of what? Questioning mind all the time when he's examining cash. Now, quickly send in your replies. What, according to you, are the various uh, verification procedures that come to your mind? Suppose you are in an audit team of XYZ Limited and the engagement partner asks you to verify the various assertions. So I'm not talking about any particular assertion. So I'm saying the various assertions with respect to cash and cash equivalents. Tell me what all audit procedures will you perform that comes to your mind that, okay, I'll perform all these things. And one very important audit procedure that should be associated with respect to verification of cash and cash equivalents. I'll wait for 30 seconds and then we'll start. So let me just have a look at your replies. Please, students, reply fast. So Om Krishna Gupta is saying surprise check, which is the most important thing. Cash counting, right? Then Swati saying count of cash, surprise check, the amount actually exists in the form of notes and coins. Shoaib is saying confirmation request from the bank. See, you yourself are able to give right answers. Others also please reply. Bhumika is saying recalculate, that is count, Hana, obtain confirmation from cashier. Sukaina is saying cash receipt with bills. That's absolutely correct. Okay. So now when the auditor has to perform the various audit procedures with respect to, let's say, existence and completeness of cash, right? So what all audit procedures the auditor is going to perform? So first of all, special care should be taken that with regard to verification of cash, that there should be what? A surprise element. See, unless and until there is a surprise element. So if the auditor tells the management that management on 31st March of this year, I'll be coming to check the cash. So I'll be coming to verify the cash, to physically count the cash. Chances are there that if the management has the intention to manipulate, it will manipulate, right? So the element of surprise should be there. And not only on 31st March, the auditor should check, but subsequently also, let's say on 5th April also, auditor should check what is the cash balance, and then he should arrive at the figure of 31st March, right? And let's say there are more than one cash, like a cashier is there, one cashier is there for petty cash, one cashier, separate branches are there, so separate branch cashiers are there. Impressed balances with the employees are there, right? So these should be checked simultaneously. Why? Because the deficit in one balance should not be compensated from the other balance. So if you are checking it simultaneously, so it will not be possible for the management, to make the deficit of one cash, let's say with respect to one cashier, branch cashier, it will not be possible to put that money here also, right? So it should be checked simultaneously. And this is so logical now. See, the next point is again very logical. Cashier should be present. See, otherwise chances are there now that if the cashier is not present and the audit team is conducting the cash count, it falls short of what the amount is shown in the books of accounts, the cashier may say that it has been misappropriated by the audit team. So cashier must be present, and he must be made to sign the statement prepared, whereby the total cash along with the denomination, whatever is there, that should be signed by the cashier, right? And if there are any rough cash book entries, the same should be tallied with the cash book. Simple. If any temporary advances to employees are given, like in factories, if any temporary advances are given, so they are given some slips. So auditor should see whether those slips are authorized or not, those are properly recorded or not. Simple. Auditor will perform cash sensitivity analysis. So you may find this term very technical, but this is a very simple process. It is basically compiling summary of total cash receipts and payments each month. So every month, auditor will compile as to what were the cash receipts, what were the payments, and he'll analyze the trend over the various months. Analyzing the trend, and in case of any variation, the same will be what the auditor will ask the management to provide a brief description. As simple as that, right? Then many of you were saying, Shoaib replied, I think, that BRS will be prepared. So yes, auditor will obtain what? BRS from the management, right? And which should be signed by the authorized personnel. See, BRS as such is one of the internal controls which is implemented by the management now. When auditor also reperforms it, then it is one of the audit procedure, that is reperformance. So as such, it is the primary responsibility, or let's say one of the internal controls implemented by the management. So auditor will obtain BRS, which is signed by the authorized personnel, and the BRS shall be obtained for all the accounts in order to understand the client process and periodicity of making BRS, whether it is prepared every month or whether it is prepared, like, let's say after 3 months, every quarter it is prepared. So auditor is going to understand that, right? I hope it is appearing to be easy to you. See, students, if you just, do not highlight the keywords or do not make the summaries, you will end up in leaving this chapter. So it's better that at this moment only, as and when we are going through the topics, after the session, you should make summaries or highlight the keywords, right? Now, with respect to bank reconciliation statement, so let's do one or two topics from your module itself. Now, bank reconciliation statement, you all are aware, right? So what will be the first step? Quickly send in your replies. So first of all, it should be obtained with respect to all the accounts. It should be signed by the authorized personnel. Now tell me what should be the next step. Quickly send in your replies, then I'll start. Very simple. BRS you all have done. So yes, tally bank book equalizes cash book. That others also please reply. So Ati has replied, Om Krishna Gupta has replied. See, basically, so we are on page number. Let me just tell you the page number. It is on 5.47. So first of all, the auditor will tally the balance that is appearing in the bank book to the bank statement, right? So the bank book is basically the bank accounts that the organization has maintained. Whatever balance there is appearing there, the auditor is going to compare it with the various bank statements that the management must have received from the bank, or the auditor might have obtained from the management, right? Now, there can be various reconciling items like checks issued but not presented for payment, or checks deposited but not credited by bank, or other reconciling items can be your interest or the charges which are accounted for by the bank but not by the client organization, right? So auditor is going to perform audit procedure with respect to such material reconciling items. Very simple. Now, see, you all are aware as to how to prepare BRS. So just move step by step. First is what? Compare the balance with the bank statement. Then material reconciling item. So the keyword here is what? Material reconciling item. So what is it? Checks issued but not presented for payments. So if such is a situation, so what can auditor do? He can obtain the bank statement with respect to subsequent period, because there it must have been the checks must have been accounted for by the bank. So auditor will obtain what? Subsequent period bank statement, right? And let's say if that check is not cleared, then you all know that 3 months is the time period after which the check becomes stale. So if such is a situation that within 3 months or more have lapsed since the issue date, then that amount should be brought back to the liabilities. It cannot be shown as the payment. Simple, right? Same way with respect to another material reconciling item, which is what? Checks deposited but not credited by bank. Again, auditor will obtain what? Subsequent period bank statement, right? And let's say if any of the check is not cleared beyond the reasonable time within which it should have been cleared, auditor will ask the management that please give us the description, right? And another material reconciling item can be what? Your amounts or charges debited, credited by bank, but not accounted for by your client organization. So in that case, auditor will consider what? The bank statement of the current period. And in case any adjustment is to be made or the same has not been made, he'll inquire the management. If management does not adjust it, what is the option available? Auditor will qualify his report. As simple as that, right? Simple. Now, with respect to direct confirmation procedures, students, we have done direct confirmation procedures in detail when we were doing what? The verification with respect to trade receivables also. Okay, so quickly let us just look as to what are the direct confirmation procedures with respect to the cash and cash equivalents. So auditor will contact all the banks and financial institutions directly, and he will ask for confirmation of the balances with respect to all the accounts, right? As at the period end. And if there is any discrepancy, that is the balance that is shown in the books of accounts vis-a-vis the balance that is appearing in the confirmation or the bank statements, he'll ask the management, he'll ask them to resolve. And in case any of the queries is still unresolved, then he'll ask the management to provide the written explanation. Simple. Now, situation can be there. So we are on page number 5.49. Situation can be there that where in very rare circumstances, no reply is received from a bank or financial institution. Then what is the recourse? Will auditor just straight away modify his opinion? No. What will auditor do? He may tally the bank statement that is received by the company and ask the management to provide him with online bank statement in his presence, that please take out a bank statement, and like one of my auditing members is sitting here, so online login to account in auditor's personal presence. Or the second way can be what? Auditor may send one of the audit team members to the bank branch, right, with the entity's personnel to obtain balance confirmation from the bank directly. Very simple. Valuation may then the next point is with respect to valuation. So whatever procedures we have seen with respect to the direct confirmation procedure. See, valuation maybe to all those procedures are going to come. Auditor will see whether the balances that are being held in foreign accounts, so whether that are been restated as required by the applicable FRF or AS 11. Simple. This disclosure requirement with respect to cash and cash equivalents, again, it makes a very good 4-mark question. So again, the language will be what? Ensure whether the following disclosure. So you will write that the auditor will ensure whether the following disclosures as required by Schedule 3, Part 1 to the Companies Act 2013 have been made. And what are those disclosure requirements? See, students, there is nothing for me as such to explain in this cash and cash equivalents. So learning here will be required, right? So cash and cash equivalents shall be classified as balances with bank, checks, drafts on hand, cash on hand, and others. Earmarked balances, that is balances which are set aside for some specific purposes like your unpaid dividend, they shall be stated separately, right? Balances with bank to the extent held as margin money or security against the borrowings, guarantees, other commitment, that shall be disclosed separately. Your repatriation restrictions. So repatriation is what? Suppose any cash is held in a foreign account, right? Foreign currency account. So converting the foreign currency into local currency. So when the company or the client is converting the foreign currency into local currency, if there are any restrictions with respect to such thing, then in respect of such transaction also, cash and bank balances shall be stated separately. And the last says that bank deposits with more than 12 months maturity. So basically your FDs and all, they shall be disclosed separately. As simple as that. But yes, learning will be required, right? So you just, first of all, how to learn, like cash and cash equivalent. So first of all, just see that there are 5 points. So this should be in your minds. First is cash and cash equivalents. For further classification, which is balances with banks, checks, drafts on hand, cash on hand, and others. Then one part related to earmarked balances, one part related to margin money, one is relating to repatriation restrictions, and the last one is relating to the bank deposits. Okay? Is it clear? Quickly send in your replies. Quickly send in your replies. Om Krishna Gupta is saying clear. Others also please reply. Then we'll start with the next topic, which is what? Inventories. So Swati is saying clear. Sukaina is saying clear. Bhumika, whatever you have written, it is correct. Vidya Sharde is saying clear. Others also please reply. So Vidya Sharde, I think it's her earlier reply. Bhumika is saying clear. Others also please reply. Then we'll start with inventories. Verification with respect to inventories. So what is the relevant accounting standard that comes to your mind? When we talk about inventories? Quickly send in your replies. So it is AS2, right? And what is the valuation criteria? So cost or NRV, whichever is lower. Swati, Sukaina, Om Krishna Gupta, Bhumika, absolutely correct. Swati, right. Right. See, the inventories, these are basically the assets which are either held for sale in the ordinary course of business, that is your finished goods, or in the process of production for such sale, that is your work in progress, or in the form of materials or supply to be consumed in the production process, that is your raw material, right? And the valuation will be what? Cost or NRV, whichever is lower, and the basis for valuation should be applied consistently year-on-year basis, and if in case there is any change, the same should be adequately disclosed in the financial statement. Simple, right? Yes, Hima Bindu, you are absolutely correct. AS2, cost and NRV, whichever is lower. Now, when the auditor has to check the existence, do not look at your modules, do not look at your screen. Tell me, see, we have done essay. What is the relevant essay number with respect to this? Existence of inventory. We have done that in chapter number 4. Let me just see. Swati correct, Shoaib correct. Others also please reply. Bhumika not correct. Don't get confused in the number. I always tell you that it's good that if you write the number, but do not write the wrong number. So it is not 510. It is 501. Right? Right? 510 was with respect to initial audit engagements opening balances. 510, right? This is what 501. So when the auditor has to verify the existence assertion, so first and foremost will be what? Attend the physical inventory count. So here you will see that how practically various aspects with respect to physical inventory count will be there. All that are discussed, which are very simple because we have done when we were doing SA 501, right? So first of all, the auditor will review the entity's plan of physical inventory count, right? And he will participate in the inventory count, right? He will also test count, right? Obviously, he will also perform test count. Now, I told, if you remember, I made a diagram and there I told you that auditor will not just go and just observe. He will also perform test count. And along with performing the test count, auditor will do what? Observation of the employees, how they are performing the test count. He will see how that procedure is been supervised, right? So he will first of all review the entity's plan, that whether the entity is performing the test count periodically or at the end, right? Participate. And when he's participating, he'll test count, he'll observe the employees, he'll observe how the supervision has been done. He'll also observe that all items of the inventory are being tagged, and the tags should be with respect to what? Proper amounts. With respect to tags, there is another point that he should compare the tags. See, on the, let's say the entire material is kept in cartons, and on the cartons it will be kept, now it contains, let's say 20 bags of 2 kg each. So he will see that these tags should tally with what? The summary sheets that are prepared. And in case of any discrepancy, he will ask the client, right? He should be alert with respect to what? Empty boxes, obsolete items. Simple. And he should perform cutoff testing. Cutoff is what? You are examining as to whether the inventory that pertains to the correct accounting period, the current accounting period, is been shown. So how can he check? He will check the receiving reports or the shipping documents with respect to certain transactions that have happened near 31st March, near the end of the year. So let's say last 5 to 10 receiving reports or shipping document he'll check. So why shipping document or receiving reports? Because there he'll be able to see now when was inventory received, whether it was received before 31st March only, whether it pertains to the correct accounting period, so cutoff testing. Then any inventory which pertains to the third party, let's say it has been received for some job work purpose, or whether it has been damaged, or whether it has been obsolete, it has become obsolete, the same shall be excluded from the inventory count. Very logical. He will check the accounting of all the stock sheets. So let's say there is a warehouse and in total 50 stock sheets are there. So he'll see whether the accounting of all stock sheets have been done or not. And in case of significant differences there, he will investigate the same. And the personnel who is conducting, entities personnel who is conducting the physical inventory count, he'll ask him to sign all the stock count sheets. Simple. And if it is conducted periodically, let's say 31st March, it is conducted, he'll attend it at that moment. If it is conducted on a perpetual, that is your continuous basis, like with respect to your grocery stores, he may conduct it at any interim date. Interim is which is not at the end of the year, in between the year. and any of the entities inventory which has been kept in with the third party, that shall be included. Tell me this point, that any inventory that is held by the third party should be included, and this point, that any inventory pertaining to the third party should be excluded. If I talk about only these 2 points, which assertion I am talking about? Sukaina, tomorrow I'll try. So tell me which assertion I am talking about if I talk about only these 2 audit procedures, rights and obligations. That the inventory which pertains to the third party is not included, and the inventory which is kept with the third party, but company is having that the right, that is to be included. Right? Right? Now, auditor may perform various analytical review procedures, and now I'll not ask, because now to you should be, yourself telling me as to what is the relevant SA number. So the relevant SA number is 520. So what kind of analytical review procedures the auditor may perform? He will perform what? Comparison of the average, industry average with the company's result, with the budgets, with the previous year trend analysis. So he may perform what? Inventory turnover ratio, which is what? Cost of goods sold divided by average inventory. Vertical analysis. So vertical analysis is nothing but the inventory amount divided by total of the assets. Vertically, you are calculating something now. He will compare the budgeted amount with the actual amount, and the non-financial information also he'll compare, like the weights and the measurement. Simple. These are what your analytical review procedures with respect to the inventory. Now, when the auditor is conducting the physical inventory count, he will again perform what? Purchase and sales cutoff, in order to see whether the inventory that has been shown in the current accounting period, whether that pertains to the current account period only. See, inventory will be purchased, right? And then it will be either used. If the inventory is of finished goods, it will be sold. So auditor will perform purchase and sale cutoff. And in case of any tagged inventory, there is any omitted transaction, that is any of the inventory is been omitted, it is not been tagged, or any invalid transactions are there, so auditor will consider them. He will perform what? He will check the arithmetical accuracy. He will reconcile the physical inventory with the records. He will reconcile the physical accounts with the general ledger. Inventory held by the third party, like your transporter, warehouse, and port authorities, auditor will perform specific procedure with respect to those. And if goods are received on consignment basis, he will see whether these are properly segregated. Simple. Now, with respect to rights, so here was the point where I was talking about goods kept with lying with third party, or goods of third party lying with the auditor, sorry, with the client. So first of all, see, with respect to any of the inventories, right? So if the same has been purchased, so auditor will see the underlying documents. Underlying documents is what? The documents, all the documents relating to that inventory, like the purchase order, the receiving report, the vendor invoice, the payment file, all documents, underlying documents, right? And with respect to consigned goods, he will see what? The consignment agreement. He will also consider what? Collateral agreements. What are collateral agreements? So if any inventory has been given as a security, so he will also consider those agreements, right? Material purchase commitment agreement. So he will also consider all those agreements. So whereby the company has entered into any commitment agreements for purchasing the material, right? He will see all the invoices whereby the inventory, let's say, of raw material is there, in order to see the ownership of the company. And he will obtain confirmation for significant terms of the inventory if required. As per SA 501, if the inventory is kept with third party, he will obtain what? Representation from the third party on the business letterhead of the third party, which is properly signed. Simple. Simple. So you may get a 3-mark question with respect to the rights of inventory, how to verify the rights assertion, right? So again, there is really the general answers are not going to fetch you good marks, right? So you will have to write the specific answers that are given in your module, right? So, and again, now for all those who ask me, ma'am, how to learn, see, just keep in mind now that with respect to inventory, first point is relating to underlying documents, and now you all are already aware as to what are the various documents when the inventory is purchased. And when we are talking about rights, so some point relating to consigned goods and some point related to inventory with the third party will be there. And then the collateral agreements, material purchase agreement, and rights with invoices are must. Simple, right? Then with respect to valuation, we all know that it should be as per AS2. The company may follow FIFO or weighted average. Whatever is the reasonable method, the auditor will consider, will see whether it is reasonable or not. Now, in your module, so students, we are on page number. Let me just tell you the relevant page number. It is 5.54. So, in your module, the valuation with respect to raw material and consumables, work in progress, and your finished goods, that is the goods for sale. This is given separately for all three heads, right? So raw material and the consumable. So the first and foremost point will be what all are included in the cost, right? So whether the carriage inward is included, it should be included. So whether it has been included, and if the company is using standard cost, then what is the basis of that standard cost, and how the same is compared with the actuals, and how the variances are analyzed and accounted for, right? Auditor will test the cost price with the purchase invoices. So whatever is the cost that has been shown in the books of accounts, he is going to check them with the purchase invoices. And he will also perform audit procedures that the damaged and obsolete goods should be shown at what? Realistic net realizable value. Realistic, right? Now, with respect to work in progress, so the first thing that comes to my mind is what? The stage of production, right? And if how the same is measured, what is the basis of the estimates, how such stage of production, the value addition is considered. And then again, what are the elements of costing? If it is the overhead, overheads are also included, then what are the bases? He'll compare it with the available costing and financial data, right? And he'll see that in the material cost, the abnormal wastages or any such factors are what? Excluded. Simple. With respect to finished goods and goods for resale, again, what costs are included? Overhead cost may, normal cost will be included, reasonable, whether the costs that are included are reasonable or not with respect to what the information disclosed in the financial statement. And again, it shall be valued at what? Cost or NRV, whichever is lower. So more or less, if you will see, it will be, the points are going to be same, that what items are included, overhead hai, then what is the basis, work in progress ke liye stages of the stage of production or value addition, what is, how the same is estimated, right? So this was the topic with respect to valuation. Now, one more topic relating to valuation is what? With respect to your obsolete, damaged, or slow moving inventory. So auditor will see that the obsolete, damaged, or slow moving item, with respect to this, he will ascertain the possible realizable value. The possible realizable value, and he will carefully examine the valuation of such goods, right? And auditor, just a minute, you may just ignore this. Auditor will what? Obtain the aging schedule. Just keep in mind this aging split, and compare the recorded cost with the replacement cost. He may calculate inventory turnover ratio. See, if the inventory is not moving, it will give him an estimate of the obsolete inventory. Now, he will test whether the overheads, only the direct material, labor, and overheads have been included. Right? Simple. With respect to obsolete, damaged, and slow moving. Now, with respect to disclosure, let me just take you through the module. So we have done till here. Page number 5.56. So we are now doing what? The topic of disclosures. Okay. Now, with respect to disclosure, again, this also makes a very good 3-mark question, that what are the disclosure requirements with respect to inventory, or you are conducting the audit, you are one of the senior members of the team, and you are being asked to verify the disclosure assertion with respect to inventories. So how will you write that? Auditor will ensure whether that I will ensure, if it is a direct question, that whether the following disclosure as required by Schedule 3, Part 1 to the Companies Act 2013 have been made. So whether the inventory has been classified as raw material, work in progress, finished goods, stock in trade, stores and spare, loose, tools and others. Whether goods in transit have been separately under the each head. And last, what is the mode of valuation? That shall be stated. So this was with respect to your inventory. Please send in a reply. Is it clear? Quickly send in your reply, students. So today we have done what? Cash and cash equivalents, inventories, and we have covered the disclosure. Amrit, Om Krishna, Sukaina, Bhumika, they are saying, ma'am, clear. Okay. Now the next is with respect to your property, plant and equipment, like your land, building, plant, equipment, furniture, fixtures, vehicles, office equipment, computers, right? Property, plant and equipment. Tell me, what is the relevant accounting standard that comes to your mind? Quickly send in your replies. So let me just have a look at your replies. AS10, Swati, Amrit, Om Krishna, Bhumika, Shoaib, absolutely correct, right? So first of all, the recognition criteria is given. Komal, Prajapati, absolutely correct. So I'm assuming that you all are aware about this. Quickly tell me, you all have studied AS10 now? Quickly send in your replies. In your accounts. So Swati, Om Krishna, Amrit, Bhumika are saying, yes ma'am. Okay. So basically, what is the recognition criteria? That the amount will be recognized as an asset. Any expenditure cost of an item will be recognized as an asset if it is probable that the future economic benefits associated with that item will flow to the enterprise and the cost of item can be measured reliably, right? So what all will form the elements of the cost of PPE? So it can be your purchase price, including the import duties, non-refundable purchase taxes after deducting the trade discounts and rebates. Your any cost directly attributable to bringing the asset to the location and the condition necessary for it being capable of operating. And then the initial estimate of the cost of dismantling or removing the item or restoring the site on which it is locating, referring to as decommissioning, right? Now, quickly tell me, what are the costs that are directly attributable to the cost of the asset? So if I ask you cost for site preparation, quickly send in your replies. I'll ask you that whether it shall be included in the cost or not. You just write yes or no. So cost for site preparation. Send in your replies. So absolutely correct. Bhumika, Swati, Sukaina, Shoaib, Amrit, right. Installation and assembly cost. Yes, okay. The answer to first one was also yes. Then tell me cost of opening a new facility, such as the inauguration costs. So Shoaib is saying no, Swati is saying no, Sukaina, Bhumika, Om Krishna, Amrit, absolutely correct. Then administration and general overhead cost. So Shoaib, Om Krishna, Sukaina, absolutely correct. No, right? So let us just now have a look at your module. So this is given on your page number 5.57. So it says that directly attributable cost, or what? Cost of like employee benefits arising directly from the construction or acquisition of the item of PPE. Cost of site preparation, initial delivery and handling cost, installation and assembly cost, and cost of testing, right? Then professional fees also is included. So what are the costs that will not form the part of the cost of item of PP? like your inauguration cost, your advertisement or promotional activities, or your staff training, or your administration and other general overheads. Clear? Right? Now, again, with respect to the PPE, tell me what is the first and foremost audit procedure that comes to your mind. Do not look at the module. Just a minute. So again, it will be what? The physical verification of the PP, and it is whose responsibility? It is the responsibility of the management. So what will auditor do? He will just attend it. Let me just have a look at your replies. So yes, physical verification, Bhumika is saying, Swati is saying whether the asset exists. Again, correct, right? Now we are talking about what? PPE, which includes land and building also, and your other like the furniture, fixtures, your vehicles, office equipment, computers, right? So first of all, auditor will see what is the entity's plan, right? Of the physical verification, whether it is done by own staff or whether it is done by a third party. Also, he will consider the periodicity. So whether the same is, let's say, done on yearly basis or whether it is done in 2 or 3 years, right? So auditor will consider the entity's plan. And when the physical verification of the PP has been conducted, again, he will see how the same has been supervised. He will compare the physical verification report with the working sheets. And see, more or less, it will be same the way we have done for inventory. He'll see all items are tagged. See, you must have seen in colleges or libraries now on the desk or the tables, numbers are written on, like I have seen generally yellow or white color paint. It is written the table number on each and every table chair. So he'll see that all items are tagged and they carry what? ID marks and number, right? And he'll reconcile all such worksheets, the results of the physical inventory count with what? The fixed asset register. And he'll see whether any addition has been updated in the fixed asset register. In case of any discrepancy, he'll ask the management to get it resolved, right? And if any asset is not in working condition or active use, the same should be deleted. But see, it is not as easy as said that the same should be deleted. Deletion can happen only after the approval from the authorized personnel, and also from the date of the deletion, the depreciation should not be charged after the date of the deletion. Simple. So this was with respect to the existence assertion, right? Now with respect to completeness, auditor will obtain what? The PP schedule from the client. What is the opening, the addition and the deletion? And the way, and then the PP schedule is going to have that closing figure. He'll compare it with the books of accounts, the amount that is coming there. He'll check for the arithmetical accuracy. And with respect to the opening balance, he will check it from the previous year audited financial statement. Simple. Now, with respect to the additions, quickly tell me with respect to land and building, what is the document that auditor will see? And with respect to your plant and machinery, what is the document that auditor will see with respect to the additions that have been made? So I can say that with respect to land and building, it will be what? Title deeds. And with respect to your purchase of furniture, fixtures or vehicles, he will see what? Purchase invoices. Simple. Okay, right? So first of all, though, in order to verify the addition, so again, students, you may get a direct 4-mark question that during the year, when you were conducting the audit of so-and-so company, you have been asked to verify the additions of the PPE, right? So these are the process. See, with respect to the addition, first of all, though, you will obtain what? The list of all the additions, right? So you will ask the management to provide you with the list, and you will see whether the criteria as per AS10. So whether the asset that has been capitalized, whether it meets the criteria as given by AS10. So which we have just done, right? With respect to spare parts or the standby equipments, they shall be recognized as PPE only when they are held for a period of more than 12 months, that is for a period of for more than one period, which is the requirement of AS10, right? He will also see that the cost of day-to-day servicing is not added to the cost of the assets, right? And he'll test what? Purchase invoices in order to see the date of addition and the installation certificates. Simple. And see, will it be possible for any personnel to just go and, purchase a crane, let's say, for the company? No. It should be what? Again, it should be approved. And students, when any company purchases, the fixed assets like your plant and machinery, computers, so there should be a proper internal process or procedure for inviting the quotations for floating tenders. And this should be before finalizing the vendor. Why? Because here, see, if the management has the intention to go into any fraudulent activity, it may purchase at a very high price from a related party. So that is why for the auditor, he will check that prior to finalizing the vendor, there should be a proper internal process and procedure for inviting the competitive quotations from various prospective sellers from floating tenders, and that should be prior to finalizing the vendor. And he'll check all the supporting documents like your mails, or if any manual was there, or relating to the internal process. So he'll check all the supporting documents, right? Same way with respect to deletion. See if any crane has been sold. So let's say a company is there which has the fixed assets in the form of the cranes, right? So he'll understand from the management that what are the reason, the rationale behind the disposal, and what is the manner how the same has been disposed of, right? And whether the management approval was there or not, he will refer what? The discard note. So a discard note will be there where the reason, who has authorized, everything will be mentioned, right? And again, he'll see whether the process has been followed for sale, like the quotations, tenders, and the sales proceeds and the resultant gain and loss should be accurately recorded. Like with respect to deletion, what will be recorded? Original cost minus the accumulated cost up to the date of disposal, and he'll see whether the resultant gain and loss that has been duly accounted for. Simple and very logical also, right? So this was with respect to addition and deletion. Now with respect to valuation. So the first and foremost thing that comes is what? Depreciation calculation. Like trade receivables ke liye we did what? Provision for bad debts. So here it is what? Depreciation. So whether it is charged on all the items except for your freehold land. What is the method? And in case of any impairment is required as per AS 28. So whether that impairment of assets has been done during the year or not, and whether it is in terms of AS 28. So basically, I hope you all are aware, but what is the impairment procedure? Quickly tell me if you all are aware. Send in your replies. Send in your replies. So basically, this is the procedure that the company has to follow when there is a reduction in the value of the asset, so as to ensure that the carrying amount of the asset that is appearing in the books of accounts, it does not exceed the recoverable amount, right? So if the market value of the asset is very low, so the company may go for what? The impairment of assets. And the relevant accounting standard is AS 28, right? Now, with respect to rights, you all have already answered that auditor will consider what? The purchase invoices with respect to what? Your plant and machinery, your furniture, fixture, vehicles, computers, and conveyance or sale deed with respect to your land and building. And he'll see whether these are what? Original title deeds. So if we talk about land and building, whether these are original or not. Why? Because if these are given as security, if any loan has been given whereby these has been given as collateral security, so here auditor will ask the management to ask for what? obtaining the confirmation from the respective lenders. And is also consider what register of charges, wherever the charge is there with respect to the asset, whether the same has been updated in the register of charges. Is it clear? Is it clear? Now we are left with the disclosure requirements with respect to your PPE. Let us do that topic from the module. We are on page number 5.63. Quickly send in your replies, whether it is clear, and also send in whether you have any doubts. So Swati is saying it's clear. Om Krishna Bhumika are saying clear. Others also please reply. And in case you have any doubt, please let me know. So Amrit is saying, ma'am, it is clear. Hema Bindu, Komal Prajapati, Vidya Sharde, please let me know. Sukaina is clear, saying it's clear. Please send in your replies. So students, understanding is one thing that is required, but learning, picking up the keywords, writing the correct answers, correct keywords, specific answers is also required in this chapter. So do not take this chapter lightly. And in fact, if the time will permit, I'll discuss the last year questions with respect to this chapter. And I think it is in November 22 that this chapter came for 14 marks, right? I think it is November 22 or 23. It came for 14 marks. So you cannot just take this chapter lightly. It may appear to all of you that, okay, we can write generic answer with respect to all the items of the financial statement, which is not good if you have to obtain good marks with respect to this chapter. Okay? So, and learning this chapter, I'm telling you, it is really very, very easy chapter. Yes, you will have to devote certain time to this chapter. Without devoting certain time, your energy to this chapter, you cannot get good marks from this chapter. And what is the thing that you need to do in order to, have like for to learn this chapter easily? Just go through this chapter and side by side make summaries. That's it. Nothing else. Because you all have done Companies Act ke provision. You all have done Schedule 3 part, the disclosure requirements. You all have done the relevant accounting standards, the knowledge of which is required here. And you all are aware about the various audit procedures we have done in the earlier chapters or the relevant standards, right? But how to write the answer? What specific answers you need to write? For that, you need to go to the module once or twice. And 115 pages, see, it is a total 115 page chapter. It is not much as such if you compare it with the weightage of this chapter, right? So please do not just, leave this chapter to writing general answers for your exams, right? These disclosure requirements wherever I'm telling, like cash and cash equivalent. So how can you write general answers there? So there, some learning, some understanding is definite. Understanding the entire chapter is required, but picking up the keywords and, learning is required. So in order to fetch good marks, you will have to understand, learn, and most importantly, summarize this chapter in your own words, right? So again, the language is what? Ensure whether the following disclosures as required in Schedule 3, Part 1 to the Companies Act 2013 have been made under the head property, plant, and equipment. The classification will be given as what? Your, just go through point number A to G. Point number A to G. So it is what? Your land, building, plant and machinery, furniture, fixtures, vehicles, office equipment, others, and as assets under lease, obviously that shall be shown separately under each class of asset. Simple. Now the third point says that the company is going to disclose a reconciliation of the gross and net balances that existed at the beginning of the period and at the end. That is, what was the gross or the net carrying amounts with respect to that opening amount, then additions during the year, any asset that has been acquired through acquisitions or mergers, or any disposal during the year. Also, the amount of change due to revaluation will be shown here. And one important point here is that when the amount of change due to revaluation is to be shown, it will be shown only if it is what 10% or more in aggregate of the net carrying value of each class of PPE. So if it is less than 10%, such change shall not be shown. If the change is 10% or more, it will be shown, right? And the next point, fourth point, is relating to revaluation, that where basically the asset has been revalued up or down, that is maybe by way of reduction of capital or there is revaluation of assets, then the fact, the amount that has been revalued, that will be shown in the balance sheet. That is correct. Also, this thing will be disclosed by way of notes in 5 balance sheets after the date of such revaluation. So let us read this point number 4, which is on your screen. Where sums have been written off on a reduction of capital or revaluation of assets, or where sums have been added on revaluation of assets, right? Every balance sheet subsequent to the date of such write-off or addition shall show the reduced or the increased figures as applicable. Obviously, a revaluation ho gaya, to increased or decreased figure will come. And shall by way of note also show the amount of reduction or increase as applicable together with the date thereof for the first 5 years subsequent to the date of such reduction or increase. Simple. That if any revaluation is there, then for 5 balance sheets after the date of such revaluation, whether it is upward or downward, the amount of revaluation that is there, whether it is a reduction or it is an increase, and also it will show what the date of such revaluation. Simple. This was point number 4 with respect to revaluation. So these are the disclosure requirements, right? Simple. Now, students, there are various additional regulatory information which I told you that I'll be covering them up in the next session as and when the other additional regulatory information requirements will come, right? So I'll do one thing. I'll start with this additional reporting requirement after the break, but let me just show you the questions. Just a minute. Just a minute. So I'll discuss the questions later on. So let us do the first point relating to additional regulatory information. I'm not able to find the Word file with respect to the questions that I have prepared. So now various information has been required, which is to be shown as the additional regulatory information. Who is required to give this information? This information is to be given by the management or you can say the client organization. Then what is the requirement? What is the responsibility of the auditor? We as auditor will see whether such disclosures have been made or not, right? Simple. So since these are what the statutory requirements as given by Schedule 3 of the to the Companies Act, so we will see whether such disclosures have been made or not. So the first point relates to what? So right now I'm discussing about various additional regulatory information that is the company required to disclose with respect to PPE. Okay? So title deeds of immovable property not held in the names of companies. So we are talking about immovable property. We are not talking about plant and machinery here. We are talking about what? Immovable land and building here. Okay? And also where the land and building has been taken on lease, we are not talking about that because there though it will be in the name of the lessor itself, right? So the title deeds of the immovable property which are not held in the name of the company, so that is appearing in the balance sheet, but the title deed is not held in the name of the company, right? Is it clear? So the company shall provide the details of all the immovable property other than properties where company is the lessee and the lease agreements are duly executed in favor of the lessee, whose title deeds are not held in the name of the company in format given below, and where such immovable property is jointly held with others, the details are required to be given to the extent of the company's share. So if it is not held in the name of the company, or if it is held jointly also by the company with someone else, the share is to be shown. So what is the relevant information? So first of all, where the same has been shown in the balance sheet, whether it is coming as PP or investment property, or PP retired from active use and held for disposal, or others. The description of line item, it will be what? Land and building only. The gross carrying value at which it is appearing in the financial statement. Title deeds held in the name of. It is not held in the name of the company, then in whose name the same is held, and that person, let's say it is held in the name of Mr. X. So Mr. X, the name is mentioned here. So whether Mr. X is what? A promoter, director, or a relative of the promoter, director, or employee of promoter, director, it will be mentioned. And since which date it is held, and reasons for not being held in the name of the company. If any dispute is going on, that will be mentioned. So indicate the dispute. And relative here means the relative as defined in Companies Act 2013. And promoter here means promoter as defined in the Companies Act 2013. Simple. Simple. Is it clear? Is it clear? So you can always get a 4-mark question that what are the disclosure requirements as additional regulatory information with respect to the immovable property, title deeds of which are not held in the names of the company. So you will have to write this, right? Is it clear? The second point is that where any PPE has been revalued, right, during the year. So the company is itself going to disclose that whether such revaluation is based on the valuation by registered valuer as required by Rule 2 of Companies Registered Valuers and Valuation Rules 2017. So see here the responsibility is on the company. The company will write that we have got the PP revalued on the basis of revaluation done by, let's say, XYZ valuer who is registered as per Rule 2. And let's say if it is the valuer is not registered, then that fact is also to be mentioned. Simple. Simple. Now, if any PPE, property, plant and equipment, if any PPE is under construction, it has been held as capital work in progress, then there is a separate reporting requirement as additional regulatory information. Again, a very good 3-mark or 4-mark question can be made out of that. So for capital work in progress, following aging schedule is to be given. So what is the CWIP aging schedule? See, why is this information required? See, a lot of funds of the company are blocked in the capital work in progress. So once the construction gets complete, it will get converted into PP, and then only the revenue will start flowing from such PP. And if the funds are blocked, so the shareholders or the other users must know as to where the funds are blocked. Will it have any impact on the liquidity? So you can see that there is a reporting responsibility on the company itself. So what is the responsibility of the auditor? We as auditors, we are going to check whether the reporting requirements as given by Schedule 3, whether the company has complied with it or not. Simple. So with respect to the capital work in progress, right? So auditor will see whether the client organization or the management has given the this disclosure as is shared on the screen. So amount in CWIP for a period of. So the amount that is held as capital work in progress, it has been held as capital work in progress since how long? Is it for less than 1 year? Is it for 1 to 2 years? Is it for 2 to 3 years or more than 3 years? And with respect to projects in progress and projects temporarily suspended, the separate bifurcation is to be given. See, just consider now, let's say any project was suspended temporarily in COVID period, right? And it is still suspended. Then the funds are blocked now. It is more than 3 years. So now what the company is itself showing, the company is itself required to disclose that see our funds are blocked in so and so project. And the shareholders can now take informed decisions that see our money is blocked here, right? So I hope you are able to understand the relevance of such disclosure requirements. Same way, the B clause says that with respect to capital work in progress, So just try to understand. The earlier point said that capital work in progress. So there we were mentioning that the amount which is been held in capital work in progress for how much period, like less than 1 year, 1 to 2 years. The next point says that, let's say with respect to any of the project, the time period that was allotted was 15 months, but now it has become what, 18 months. So it has become overdue. Or let's say the cost that was budgeted for a PPE construction was, let's say, 1 CR, and now it has exceeded, let's say, it has crossed the limit of 1 CR, and the expenditure that has already been incurred is 1.5 CR. In respect of those CBIP, what is the uh, requirement? So here it was what, CWIP aging schedule, right? The A point. Now we are discussing what, CWIP completion schedule, that how much time will it now take to get completed. Are you able to understand the difference? Earlier we have understood aging schedule, how old is it, or you can say for how long the money is money has been the amount has been held as CWIP. But here it is what? Just read with me, clause B. For capital work in progress whose completion is overdue or has exceeded its cost compared to its original plan, the following CWIP completion schedule shall be given. That according to the management, what is the completion schedule of that CWIP? Will it be completed in less than 1 year, 1 to 2 years, 2 to 3 years, or more than 3 years? And again, the details of the project where activity has been suspended shall be given separately. Right? So just try to understand. See, if any activities are suspended temporarily, or let's say the way we have seen for clause B also, that details of project where activity has been suspended shall be given separately. Why? Because see, this information is going to be very important for the shareholders, because they will know that okay, the funds are blocked in so and so CWIP, right? And whose responsibility is to disclose? It is on the management or the client organization only. We as an auditor, we are going to check as to whether the same has been disclosed or not. Is it clear? So again, I told you that very good question can be framed out of this B clause also. So this is CWIP completion schedule and this is CWIP aging schedule. I hope it is clear. Students, please let me know whether this topic, which is really very, very important, the additional regulatory information with respect to PPE, whether it is clear or not. Let me just have a look at your queries. So Om Krishna is saying clear, Shoaib saying clear, Bhumika saying clear. So Sukaina is saying, ma'am, can I learn your notes and back answers and understand rest of the things? See, my notes consist of whatever is mentioned in your module only, but just in condensed form, which I am asking you to prepare on your own. Why? Because see, when you will devote time, your energy, your efforts to make notes in your own language that you are able to understand in a very quick and easy manner, that is going to help you in learning, in remembering those notes. That is why I do not share my handwritten notes, because if I'll share my handwritten notes, maximum of the students are going to get confused, because I write various short forms which I am writing when I'm making notes for myself. I made these notes for myself to teach you, right? So if you want to make notes, if you want to use notes, just after the session, 45 minutes are required. I'm sure you will be able to make good notes for your purpose, right? So Sukaina, my notes are from this module only. See, Amrit is saying, ma'am, can institute ask question on AS2 and 10 practical aspects? See, whatever is given in your module, you do that. And practically, nothing will be asked which is out of syllabus as such. AS2 and 10, you all have covered in your accounts also. You all have an understanding about that. So if anything will be asked, it will be within the domain itself. No question as such will be asked, which is, outside your syllabus of intermediate. Right? So is it clear? So you haven't answered to my query that whether you have understood these additional regulatory information, which forms very good question, 3 mark, 4 mark question, very good straight questions. Repeat it once again, ma'am. Srijin, which topic you want me to repeat? Quickly send in your replies. Which topic you want me to repeat? Komal is saying clear. Hema is saying clear. And now you have mentioned just now explained. So your doubt is clear now, Srijin? So you can just send in your queries, and otherwise students will do one thing before starting with the additional regulatory information with respect to borrowings, which I have left in the last session, and the share capital and securities premium. Let's take a break of 10 minutes here, and after the break, I'll start with additional regulatory information. And if the time will permit, I'll definitely discuss the questions of the last years, right? So let us take a break of 10 minutes here. IT, can we start? So I hope students, you all are back after the break. So one of the students has asked me to repeat this topic of capital work in progress. I'll repeat it and then we'll start with the additional regulatory information with respect to borrowings. So this is with respect to the property, plant and equipment. So the company is itself required to give give in the notes that what amount is blocked basically in the capital work in progress. So there two clauses are there. One is with respect to capital work in progress aging schedule, that is for how long the amount has been there as CWIP. So the disclosure that is required is amount in CWIP for a period of less than 1 year, 1 to 2 years, 2 to 3 years, or more than 3 years with respect to projects in progress as well as projects temporarily suspended. And obviously the CWIP total should tally with the amount that is shown in the balance sheet. The next point is with respect to the capital work in progress whose completion is either overdue or the amount has been exceeded, actual cost compared to the original plan has exceeded. So in that case, the company is required to give a disclosure by itself that the CWIP in which the completion of which is overdue or where the amount has been exceeded, it will be completed in less than 1 year, 1 to 2 years, 2 to 3 years, or more than 3 years. Is it clear? Now let us do the additional regulatory information with respect to the borrowings. And one point in common to borrowings and share capital and securities premium is the fourth additional regulatory information, this one that we will be covering today. So now with respect to the borrowings, what are the additional regulatory information that is to be shown by the client itself or the management, and what is our responsibility? As I always say, that whether the management has appropriately shown such disclosure requirements. So we are talking about borrowings, right? So where the company has borrowings from banks or financial institutions, students, we are on page number 5.35 of your module. So where the company has any borrowings from banks or financial institution on the basis of security of current assets, for example, the stock, inventory, or the debtors, right? So the company will disclose that, see, whenever such working capital limits are being availed, or whenever such loans are taken on the security of current assets or the stocks, the company is required to give quarterly statements to the banks, whereby the stock statements or the debtor statements are given on a quarterly basis, right? So here, if the quarterly returns or the statement of current assets that are filed by the company with the banks or the financial institution, if whether these are in agreement with the books of accounts. So let's say the company has given the stock statement whereby the stock of total 1.5 CR is shown. However, in the books of accounts, the stock of 1.30 CR is shown. Now there is what discrepancy, right? So the first point is whether these are in agreement or not, and if not, then the summary of reconciliation and reasons for material discrepancy, if any, should be adequately disclosed. So this is one of the additional regulatory information. The disclosure is to be done by the company itself, that where the company has taken loans from banks, financial institution on the basis of security of current assets, what shall be disclosed? Quarterly, whether the quarterly returns or statements of current asset that are filed by the company with the bank's financial institution, whether these are in agreement with books of accounts, and if not, then a summary of reconciliation and reasons for material discrepancy. Again, a very good question, like you may get a 4-mark question that the company has taken a loan from the bank with respect against the security of the stock. So what are the disclosure requirements? Also, with respect to one of the clients, the audit team becomes aware that it has been declared as a willful defaulter. So you may get a question for 2 mark each, like 2 question, 2 parts can be there for 2 marks each. Okay. So the next topic is what? Willful defaulter. Quickly send in your replies. What is a willful defaulter? Quickly send in your replies. So Srijin Roy, I hope your doubt is clear. Others, please tell me. So Amrit, Bhumika, Srijin, then Shoaib, Sunil Gangade, Swati, Komalpreet, Kavitha. Uh, Send in your replies. So bank categorizes the company as willful defaulter. Swati, correct. Komalpreet Singh, who has the ability but does not pay. Correct. Voluntary declaration is required. Correct. Okay. So, see, Vijay Mallya was declared as a willful defaulter by IDBI, right? So, if the company, the client has been declared as a willful defaulter, so now there is a reporting responsibility or the disclosure requirement is there on the company itself. The company will have to tell the users of the financial statement that, see, we are the willful defaulters. So again, this, if such information is there, this is going to have an impact on the, you can say, on the image of the company, right? So where a company is declared as a willful defaulter by a bank or a financial institution or other lender. So first of all, who is a willful defaulter? Who purposefully or willingly, who is not making payments to the bank, right? So, where a company is declared as a willful defaulter by any bank or financial institution or any other lender, the following details shall be given. So, the date of declaration as willful defaulter and the details of the defaults, amounts, or the nature of the defaults. And willful defaulter here means a person or an issuer who or which is categorized as willful defaulter by any bank or financial institution or consortium thereof in accordance with the guidelines on willful defaulters issued by the Reserve Bank of India. So, the company is itself required to disclose as additional regulatory information that we have been declared by so and so bank as willful defaulter. The date of declaration is so and so, and the details of defaults are so and so. That is the amount and the nature. Clear? The next point is again of charges or satisfaction with registrar of company. So if any loan is taken against the security of any of the asset, then the same is the same is that charge is created with registered with the registrar of companies. And satisfaction is what? When the loan is repaid, then that charge will be removed from that asset. Then that is also registered with the registrar of companies. So if in both the situation the charge or the satisfaction is not registered with the ROC beyond the statutory period, then the details and reasons thereof shall be disclosed by the company itself. Simple. Is it clear? Quickly send in your replies. We have done three uh, topics with respect to the loans borrowings. Quickly send in a reply whether it is clear or not. Then we'll be starting with the last requirement, right? Quickly send in a reply so that I can start with the last requirement with respect to borrowing. So Komal Preeti is saying clear, Sukaina is saying clear, Kavita is saying clear, Om Krishna Swati, Bhumika are saying clear, Amrit is saying clear. Others also please reply. Right. So the next is with respect to utilization of borrowed funds and share premium. So why is this topic coming here also and with share capital also? So let me just show you. So this is coming here with borrowing, and this topic was there on your page number, this page number 5.22 also, right? Because this is with respect to utilization of borrowed fund, which is long-term borrowings, like the topic of borrowings and securities premium. So the topic securities premium is related to shares only. So that is why this topic is covered under both the heads, right? So utilization of borrowed funds and securities premium. So see, it says that, let's say a company is there. So this is our client. So just a minute. So this is our client, X Limited, right? And this company has advanced or loaned or invested fund in another company. And that fund is out of the borrowed funds or the securities premium or any other source to another company, which is, let's say, Y Limited. And this is also known as intermediary as per this clause. And it can be a foreign entity also, right? Right? And the understanding between X and Y, whether it is in writing or otherwise, so writing or oral, that this intermediary, it shall further advance the funds to Z Limited. Out of the funds that has been given by X Limited, it will further advance to Z Limited. So this is what intermediary, acting as an intermediary, or that Y Limited will give a guarantee on behalf of the Z Limited ultimate beneficiary. In such a situation, what are the disclosure requirements by X Limited? This we are going to discuss here, right? So if you just have a look at the A clause, it says that where company has advanced, loaned or invested funds, either borrowed funds or share premium or any other sources or kinds of fund to any other persons or persons. So where a company is what? X Limited. To any other persons or persons is what? Y Limited, including foreign entities, which is what? Intermediary, with the understanding, whether in writing or otherwise, that the intermediary shall. So in order to understand the point from, till where we have read, just keep in mind this, that where the company, which is what? X Limited, has advanced or invested some funds in another company, Y Limited, which is intermediary, which can be a foreign entity, with an understanding between X and Y, whether in writing or otherwise. Clear? That the intermediary shall. So Y shall directly, indirectly lend, invest in other persons. So in our case, it will be what? Z Limited, right? Identified in any manner whatsoever by or on behalf of the company, which is what? Ultimate beneficiary. See, ultimately, who is going to get benefit out of the transaction? X and Z. Y is just acting as an intermediary, na? So for this clause, the ultimate beneficiary is what? X Limited. Provide any guarantee, security, or the like on behalf of the ultimate beneficiary. The company shall disclose. So the disclosure requirement is on the company in question, which is what? X Limited. So what will be the disclosure requirement? See, simple. The date on which such amount has been transferred and the amount. The date on which such further amount has been transferred and the amount. And since guarantee word is also there, the date on which such guarantee has been given and the amount. Simple. So let us read these three clauses. So the company shall disclose the following. So X Limited is going to disclose the date and amount of fund advanced, loans or invested in intermediary with complete details of each intermediary. So details, date and amount of funds transferred and the date by X into Y and the details about Y. Simple. The date, amount of fund further advanced, loans or invested by such intermediary to other intermediaries or ultimate beneficiaries along with the complete details of the ultimate beneficiaries. Now this clause is talking about Z, the complete details of Z and the date and the amount. The date, amount, the third clause says the date and amount of guarantee, security or the like provided to or on behalf of the ultimate beneficiary. So ultimate beneficiary in this clause is what? X Limited. So ultimate beneficiary basically means to whom the benefit has been derived. It can be X Limited, it can be Z Limited, depending upon the context in which it has been used. Y is not the ultimate beneficiary. Why? Because he is the, or it is the intermediary, right? right? And the fourth point says that a declaration. So X Limited is going to give a declaration in the notes to accounts that relevant provisions of Foreign Exchange Management Act 1999. So Foreign Exchange Management Acts becomes applicable when the amount is transferred from one country to another. And the Companies Act have been complied with for such transaction, and the transactions are not violative of the Prevention of Money Laundering Act. So money laundering is basically concealment of the original origin of the illegal source of income, basically. So a declaration will be required that FEMA provisions, Companies Act provisions, and the Prevention of Money Laundering Act 2002 provisions all have been complied with, that these are not violative of Prevention of Money Laundering Act, right? So we have read it. Now let us just again understand this with the help of this diagram. Then learning of this point is going to be easy for you. So where the company, so this company is our client, right? So it says that where the company has advanced or loaned or invested funds in any intermediary, which can be a foreign entity also. So this is the intermediary. With an understanding between the entity and between the company and the intermediary, it can be in writing or otherwise, right? That the intermediary shall further directly or indirectly. So there can be a number of companies or intermediaries in between, but for simplicity, I have taken the example of, just a minute. I've taken this example. So let's say Z Limited is there. So with an understanding in writing or otherwise that the intermediary shall directly or indirectly lend, invest in other persons or intermediaries by or on behalf of the ultimate beneficiary, or provide a guarantee or the like to or on behalf of the ultimate beneficiaries. The company shall disclose the date and amount of this first transaction along with the details of intermediary. Second, the date and amount of this transaction along with the details of the ultimate beneficiary, right? The third, the date and amount of guarantee or security which is provided on to or on behalf of, see, to or on behalf of ultimate beneficiary Z or X. And last, that a declaration that the provisions of the FEMA Act are complied with, and it is not the violative of the Prevention of Money Laundering Act 2002, right? So this topic may appear very lengthy to you and very technical, but if you just keep in mind this diagram, you are able to learn it very quickly. So where the company has invested or in advanced loans to Y intermediary, who can be which can be a foreign entity, with an understanding in writing or otherwise that the intermediary shall further invest or loan advance loan directly or indirectly to another company, which is what the ultimate beneficiary. So the company is required to give four disclosures. So one is a declaration and three disclosures are relating to this and the guarantee thing. And the fourth one is the declaration with respect to FEMA, Companies Act, and PMLA, that is Prevention of Money Laundering Act 2002, is not violative. Is it clear? First of all, there is another clause with respect to this. Tell me, are you able to understand this? Or by looking at this diagram, has this diagram helped you in understanding and learning? Now, do you have the confidence that you will be able to write the answers in your exam? So Sukaina is saying yes. Amrit saying yes, ma'am. Now clear. Komalpreet saying yes. Swati saying yes. Shoaib saying yes. Others also please reply. Bhumika saying yes. So students, again, I told you that my purpose of taking this session is to help you in understanding as to how to learn also, right? Now, if we talk about the B clause of this point, it is just the opposite. It is just the opposite. So here it was what? That the company, our client has given the money, right? But now read clause B with me. So we are on page number 5.23. Just read this clause B from the screen. where a company has received any fund from any person entity, including foreign entity, with the understanding, whether recorded in writing or otherwise, that the company shall directly, indirectly lend or invest in other persons or entities identified in any manner whatsoever by or in behalf of funding party, which is what ultimate beneficiary. So tell me, what has the company now become in this case? The disclosure is to be given by our client, the company, but now it is performing the role of intermediary. Komalpreet, absolutely correct. Right? So if you have understood that example, I'm sure that point number A and B, both you are able to write in correct language, because there is no technical language as such. But yes, the keywords, ultimate beneficiaries, funding party, including foreign entity, understanding whether writing or otherwise, this you must be aware of, right? So this basically says, now it says that, so who is our client now? Y Limited, right? So it basically says where the company has received any funds from any person entity, including foreign entity. The funding party is now X Limited, right? So let me just make it again, X Limited, Y Limited, and your Z Limited. So this is our client now. So the company has received funds from, this is now what? Funding party. So the company had received any funds from any person or entities, including, and this can be what? Foreign entity. And there is an understanding between both of them, which can be in writing or otherwise, that the company shall. So client shall do what? Directly, indirectly lend, invest in other persons identified in any manner whatsoever by or on behalf of the funding party, ultimate beneficiary, that the entity has been identified by X Limited, or provide a guarantee, security, or the like on behalf of the ultimate beneficiary, the company shall. So our client shall disclose the following: the date of, again, the date and amount the funds is received, along with the details of funding party, the date and the amount of fund further advanced, loaned, or invested by other intermediaries, along with complete details of other intermediaries or ultimate beneficiaries. Here now for this clause, ultimate beneficiary is what? Z. The date and amount of guarantee, security, or other like provided to or on behalf, and a declaration, again the same declaration, that the provisions of your FEMA Act 1999, your Companies Act 2013 are complied with, and there is no violation of the Prevention of Money Laundering Act 2002. So for all those who tell me that, ma'am, learning is difficult, see, just look at the relevant page number of your module and tell me if you make summaries like this. So this diagram is appearing to be very shabby to me, but if you make diagrams like this, is this going to help you or not? Quickly send in your reply. Swati, are you asking me, or you are just telling me that the topic is clear? So I hope now you are able to understand this topic, because most of the time I have seen that students leave this topic. So Swati saying, yes, ma'am, it is clear. Amrit saying clear. Bhumika saying clear. Om Krishna saying clear. Sukanya saying clear. So that's good. Right. So what we have done so far, students, we have done this chapter till page number till PPE, we have completed all topics. I haven't left any topic of this chapter, any topic. So today we covered the disclosure of debtors, then we moved on to cash and cash equivalents, inventories, then PPE. Along with that, the additional regulatory information of PPE, and then we moved on to the additional regulatory information with respect to borrowed capital and your share capital. So the notes of share capital are completed, borrowings are completed, PPE are completed. Notes of intangible assets, so we have to do. So I'll be taking that in the next session. Meanwhile, let us just have a discussion with respect to the various questions of your last year. Now, if you remember, I told you that in one of the examination, so it was November 22. So if you can see, I marked it also. For November 22, this question was asked for 4 mark. Then November 22 में again a 4 mark question, 8, total 8. Then November 22 में 3 mark question, 11. And again November 22 में 3 mark question. So 14 mark question out of this chapter, right? And you will see exactly like direct questions from your module has come. So let us do one thing. Whatever topics we have cleared for so far, I'll try to cover various questions with respect to those topics. Just go through the question that is appearing on the screen. And please, students, before giving me answers, just keep in mind that you need to read the entire question. Why? Because the requirement is asked in last. Plus, you have to give specific answers. If any assertion is been asked, that with respect to existence assertion, with respect to completeness, you have to give any audit procedures, please answer to that question in a very specific way. Do not share with me general answers. Okay? So read this question and just if you want to share answers with me, you can share the page number from your module which you think is the correct answer. Please do not look at the answers given in your on the screen. So this is the question. The financial statement of XYZ Limited show long-term borrowings from banks, financial institution, leasing, and hire purchase companies. Additionally, the company has issued debentures to its thousands members to raise funds in accordance with provisions of Companies Act 2013. So it is talking about what long-term borrowings, lease, hire purchase, and also what debentures. Okay? The money raised by issuing debentures is also reflected in long-term borrowings. As the statutory auditor of XYZ Limited, CAX wants to verify that all borrowings on balance sheet date represent valid claims by banks or other parties. Suggest few audit procedures in this regard. Go through this question and send me the answers that answer that you will write in your exam. Do not look at the answers which I have also shared, but do not look at those answers right now. So this is with respect to long-term borrowings. Okay? And it says that whether the borrowings on the balance sheet date represents a valid claims by banks or other parties, that is whether they actually exist or not. Okay? So let me just take you through the module. Page number 5.28. So one of the students have answered it correctly. For others also, I'll check the answers. Just give me a second. 5.28. See. Read this. If you are able to see, I have just selected all borrowings on the balance sheet date represent valid claims by banks or third party. So these are the audit procedures that the auditor question? If there is any voice issue, the IT team is fixing it. Meanwhile, read this question. Send in your replies. Okay, okay. So I hope students, I am audible. So we were discussing this point, this question from May 22 examination, that how is short-term borrowing disclosed in financial statement as required under Part 1 of Schedule 3 to the Companies Act 2013. So I was telling you that this is a very direct question. And again, specific answer is required that is going to fetch you for full marks. I hope it is clear. Right? So now the next part is mention any three expenses which are revenue in nature but qualify as capital expenditure. So certain revenue expenses also qualifies capital expenditure, like see wages on installation of machinery. So wages is as such is a revenue expenditure, but on installation of machinery it will qualify as a capital expenditure. Legal expenses as such is what? A revenue nature item. But in purchase of land and building, it will be what? Legal expenses in purchase of land and building is again, it will qualify for capital expenditure. Then again, freight inwards is as such a revenue item, but freight inwards on purchase of assets. Why? Because these expenses are incurred to bring the asset to their use, to their position where the same can be used. So wages on installation will be capitalized. Legal expenses on purchase of land and building will be capitalized. Freight inwards on purchase of assets will be capitalized. So a very simple topic, right? Now read this question. Right. Read this November 22 question. This is a 4-mark question and a very good question. Just read this question. Do not look at the answer. I'll try to hide it. And now send me the reply. Two things are being asked in this question. You are required to give specific answer with respect to both the things. Tanshi, I hope I'm audible now. And Nancy is saying, ma'am, please tell some important topics. See, wherever important topics or wherever questions are there on with direct questions, or in fact, they become a good question, 3-mark or 4-mark questions, I am telling you as in when it is coming. Otherwise, the understanding of the entire chapter is very important, you know. So you cannot as such leave any topic. So, right. Sukaina is saying sweat equity to employees for hard work, and if promoters name a number of shares and percentage, that is absolutely correct. But again, the what matters here is that you will have to make that table that is required. So first of all, let us just read this question. So S and Company Chartered Accountants are appointed as the auditors of ABC Limited. CAS, the engagement partner, has come across the following while verifying the equity share capital of the company. He noticed that some of the equity shares are held by promoters. Some shares are issued as sweat equity shares to the employees. So the first part says, what is the meaning of sweat equity shares? And the second part says, what are the disclosure requirements of such promoters' shareholding? Now, as I always say, ask you to read the question fully in entirety with patience. So two things have been asked for in this question. So first is what is the meaning of equity share, sweat equity shares? See, students, you always ask me that, ma'am, how to give answers to the practical based question. See, this is a practical based question, but see, your conceptual understanding is what is asked for in this question, right? So what is the meaning of sweat equity shares? So you all know that section 54 of the Companies Act. Again, here I would like to tell you, write correct section number. If you are not sure, if write only if you are sure about the correct section number or the SA number or the AS number. The employees may be compensated in the form of sweat equity shares. Sweat equity shares means equity shares issued by the company to employees or directors at a discount or for consideration other than cash for providing know-how or making available right in the nature of intellectual property rights and value additions by whatever name called. So this definition, though you are learning since very long, I'm sure that you now have learned it by heart. Now, disclosure requirements of such promoter shareholding. So, such is basically with respect to this point. He noticed that some of the equity shareholders, equity shares are held by the promoters. So, let me just take you to the relevant topic in from your module. So, the definition of the equity shareholder, sweat equity shares is given where? Here. This on page number 5.17. Right? Direct question from here. And then share capital, this M clause. And I remember that I have asked you to mark it as very important. A 3-mark question can also come. Now here, both the parts in combination consist of what? 4 marks. So the company shall disclose. So you will have to make this table. So the serial number, the promoter name, the number of shares, percentage of total shares, and the change during the year. Promoter here means the promoter as defined by Companies Act 2013. Details shall be given separately for each class of share, and percentage change shall be computed with respect to the number of shares at the beginning of the year. And if not that, then during the first time when the shares are held with respect to the date of the issue. Is it clear? Is it clear? Are you able to, have confidence on this chapter? So Bhumika is saying, ma'am, sweat equity shares are shares issued to class of correct promoters holding in tabular format. Correct. Bhumika is saying clear. So I hope students you are able to understand. Sukaina, Bhumika, Amrit, Chaudhary are saying it is clear. So that's good. So now let us just have a look. This question we haven't covered as such. This topic we'll cover in the next session. Now just look at this question. The C part, I've tried to hide the answer. So this, just read this again. This is from November 22 for 3 marks. While auditing books of accounts of Solar Limited, you observed that an amount due from a debtor for invoice issued on 31st March 2022 has not been recognized in the books of accounts. And the date of invoice is what? 31st March. As an auditor, you want to ensure that all trade receivable balances that are supposed to be recorded have been recognized in the financial statements. All trade receivable balances that are supposed to be recorded have been recognized. How will you achieve the stated objective? Tell me, what is the assertion that has been talked about in this question, that has been asked in this question? So, Komalpreet, Bhumika, Shoaib, absolutely correct. They have mentioned the correct assertion. Others also please reply. Sukaina, please reply the assertion. Om Krishna Gupta, absolutely correct. He has also mentioned the correct assertion. Sukaina, absolutely correct. So it is with respect to completeness. Now tell me what has been asked. How will you achieve the stated objective? that as an auditor, you want to ensure that all trade receivable balances that are supposed to be recorded has been recognized. So see specific answer with respect to completeness assertion. So let us just go to the module. So this is with respect to trade receivable. Tell me the page number. Yes, 5.41. Om Krishna Bhumika Swati. Absolutely correct. So all trade receivables. So we are on page number 5.41, the last box. All trade receivable balances that were supposed to be recorded have been recognized in the financial statement, the completeness. So what will auditor do? The auditor needs to, let me just take you through. So the auditor needs to satisfy himself of the cutoff. With cutoff, the sales could be understated or overstated. Here there is a need to perform the following procedures. For invoices issued occurring the last date during the last few days, that is cutoff date, and which has been included in the debtors, check that goods should have been dispatched and not lying with the company. Ensure that all goods dispatched prior to the period end have been invoiced and not included in debtors on the test check basis. Ensure that no goods dispatched after the year end have been invoiced and included in debtors for the period under audit. Is it clear? Is it clear? This November 22, this topic also we haven't covered. So Abhi, I'm leaving this. Now read this question. So in the last chapter, because of the paucity of time and since my endeavor was to cover all the essays, I was not able to discuss or take up the last year questions, right? So that is why for this chapter, I have tried to take up the question relating to the topics we have covered so far. So read this. Management of D Limited has issued shares at a discount to its creditors. Issued shares at discount to its creditors. Explain the provisions of the Companies Act 2013. When shares are issued at a discount to creditors, as an auditor, what will be your concern for checking in such a case? Concern of checking in such a case. Quickly send in your replies. See, it says that explain the provisions. So it is always required that when the relevant provisions of the Companies Act has been are been asked for, mention the section number also. Again, if you are sure, do not write the wrong numbers. So let me just have a look at the answers. So Bhumika and Amrita are saying section 53, right? Swati Singh, shares can be issued to creditors when credit is converted into debt. Correct. Komalpreet is saying ensure that issued under debt restructuring scheme section 53. Right. Swati Singh, debt converted into share. Right. So let us just have a look at it from your module. So shares issued at a discount to its creditors. So what is the relevant page number? See, not this. Section 53. So section 53 of the Companies Act, and the question is pertaining to this clause, this particular clause. So what is the answer? So the answer is on page number 5.15 of your module assets. Just a minute. Amrit is saying shares can be issued to creditors and sweat equity shares. Right. So the page number is 5.15, which is correct. Swati has mentioned it. Om Krishnan Gupta has mentioned it. Students, absolutely correct, right? So let us just have a look at the answers. According to Section 53 of the Companies Act 2013, a company shall not issue shares. So it why? Because it why we are mentioning all this? Because it is saying explain the provisions of the Companies Act when shares are issued to a discount to at a discount to creditors. So Section 53 of the Companies Act, a company shall not issue shares at a discount except in case shares are issued as sweat equity shares in terms of Section 54. Any share issued at a discount shall be what? Void. Notwithstanding anything contained in 1 and 2, a company may issue shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt restructuring scheme in accordance with any guidelines or directions or regulations specified by the Reserve Bank of India under Reserve Bank of India Act 1934. So, see again here also two things have been asked for. All of you have given me answer with respect to this one aspect. But two things are asked in this question. Explain the provisions of the Companies Act 2013 when shares are issued at a discount. And the second part is, as an auditor, what will be your concern of checking in such case? So this is the second part which you need to answer. So let us see how to answer. So the auditor, so concern of checking as an auditor, the auditor should verify that whether the company has issued shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt restructuring scheme in accordance with any guidelines or directions or regulations specified by RBI or under the RBI Act 1934 or Banking Regulation Act 1949. So I hope you are now able to uh, understand as to what we are discussing. So, and what we have discussed so far, and all your understanding is now helping you to answer the questions correctly. Quickly send in your replies. Quickly send in your replies. Are you able to answer to these questions with confidence now? ठीक है. So Swati is saying yes, Kavita is saying clear, Komalpreet saying yes, Amrit Chaudhary saying yes, Bhumika is saying yes. Chalo, good. We are on page number 5.11 of your module. So just go through this, test your understanding one. Do not look at the answers given at the back. Just try to answer it on your own. Quickly go through this question, quickly. Quickly. A company is engaged in manufacturing of fabrics from yarn purchased from different suppliers. Occasionally, it also manufactures fabrics tailor-made in accordance with requirements of certain mills from yarn received from these mills. The company raises bill of its labor charges only on mills for converting yarn into fabrics. The auditor of the company tries to ensure that stocks of the company as at year end do not include stocks pertaining to these mills. Which assertion auditor tries to verify in above situation? How he can ensure that? Again, two things have been asked for. Tell me. So Shoaib, you are correct. Others also please reply. And Shoaib, please answer to the next point also, how he can ensure that. Quickly send in your replies, students, so that if time will permit, we'll take other test your understanding also. So, Sukaina, check your answer. Read the question carefully. Shoaib, Swati, Komalpreet, correct. Bhumika, check your answer. Students, don't get confused. Read the question carefully. So it basically says that The auditor of the companies try to ensure that, now read with me, the stocks of the company as at the year end do not include stocks pertaining to these mills, like the stock that has been received for job work purpose. So whether the company is having the right, so rights and obligation assertion, and how he can ensure that, see, stock records or the agreement with the mill, so auditor can go through all those documents. So let me just take you through the answer also. It is given on the last page. Just a minute. Is there any option of go to? Yeah. So the page number on which the answer is given is 136. So see, answer to the first question. The auditor is trying to verify assertions relating to rights and obligations. He is verifying that the company owns and controls inventory recorded in the financial statement. Any inventory held by company on behalf of another entity has not been recognized as part of inventory of the company. This can be achieved by verifying stock records pertaining to goods received from mills and sent back to mills after carrying out necessary operations. Besides, agreements with such mills may also be verified. Is it clear? Is it clear? Let me just have a look at. Yes, Sukaina is saying yes, ma'am, it is clear now. Anna, read the question carefully. There is another question, test your understanding. And let us just do that also. So it is on page number 37. Read this question. A company has availed cash credit facility of 2 CR from a bank for meeting its working capital requirement against security of stocks and debtors and guaranteed by directors of the company. Discuss how the above cash credit facility would be classified and disclosed in financial statements of the company. So now to you all know this is one of the what? It would be classified and disclosed. So let us have a look at the answer. So it shall be shown under the head borrowings and classified as short-term secured borrowings specifying nature of security. The above said outstanding amount shall be further subclassified under heading loans repayable on demand from banks. And as per requirements of Schedule 3 of Companies Act 2013, where loans have been guaranteed by directors or others, aggregate amount of such loans under each head shall also be disclosed. So see, you have to read the question in entirety. There is a line which talks about what the loans been guaranteed by directors, and if you just look at the disclosure requirements, please. So see, whether loans have been guaranteed by directors, the same shall be disclosed separately also. So I hope students you are able to now answer to the questions. So we have discussed this chapter till your topic of tangible assets, your property, plant and equipment. So we are to start intangible assets in the next class. That is, we have done till page numbers 5.65 in entirety. I haven't left any of the topics. And students, as I always tell you, that you can take advantage of these classes only if you go through the module after the session, right? So I'm assuming that you will do your homework, and before coming for the next session, you will go through the module till where we have done. So thank you and see you in the next session.
Recording stopped.